watching D Street in Conversation today. But let me move across and welcome in my guest today. Mohit Mirchandani, Head of Equity at Taurus Mutual Fund, joins me. Mohit, good to have you on the show. Let's start with the big question right now. Is there more room for this rally to continue? And is the pause that we witnessed today, as well as what we saw yesterday, merely just consolidation, pausing for consolidation, and then getting ready for a bigger move ahead?
I suspect today's and yesterday's move was more consolidation before we head higher. The point, Namrata, is as I look at the action, on a short-term basis, 4 days, 8 days, we're seeing these gyrations, and I suspect we might just go back to test that 4,700 which we did earlier in June. But I'm not entirely convinced we'll break out from there and move on to new highs. My sense is we'll probably test that and fall back. I think there's a range that's beginning to develop here, which might be 38, 39 on the lower side and maybe 47 on the upper end. And we've just got to wait for earnings to catch up. We've made the big first move, and I think it'll be healthy for the markets if we spend a few weeks, actually maybe a couple of months, just doing this range and consolidating. And in the meantime, we let the economic indicators begin to prove that we are truly looking up. Let the earnings come out, because right now I think we are running ahead of ourselves. So a consolidation will be healthy.
Valid point there. So 3,800 to 4,700 is the range that you believe that the market will move in. Mohit, but earnings so far, and I understand we've still got a whole host to consider, but earnings so far have largely beaten street estimates. Is that not making you feel a little more optimistic about the second half, looking at revising some of those EPS targets as well for the Sensex?
I would break that down into a few sectors. On the banking front, while headline numbers look good, the quality of earnings are not encouraging in my opinion, because operationally a lot of them are still seeing some strain, whether it is loan growth or it is just NPAs. I think there is a little stress there. On the realty front, there's nothing happening. Metals are not much. Cement and automobiles were pretty much expected, because month on month we could see the kind of volume growth they kept delivering. We could also see price increases on the cement front. So those numbers were pretty much expected, and I suspect they are priced in already. So I think you got to play it sector by sector. On the FMCG front, sure, you will see, I suspect you will see a fair amount of, the reasonable 12-15% growth across the board on average. Which in this environment I think is very good. So I think our index is heavily skewed to commodities and banking, and we need to see a little bit of turnaround there on the operational front to be convinced that we are going to move on.
So what you're saying, Mohit, is that none of the surprises, even if we've had better than expected numbers in, say, cement and auto, have been hugely above street estimates to make you change your positions in terms of your portfolio allocations in these sectors. And if I can just add on IT, because there's been a big surprise from all three actually, Infosys, TCS and Wipro.
Yeah, I think IT was the surprise which a lot of us, at least I did not expect. So I would suspect I clearly missed that one. Pleasantly surprised though.
So would you be convinced enough to upgrade your allocation in portfolios? Is it good enough to make you do that, Mohit?
No. I think I might just use IT as a tactical play. But from a longer term standpoint, as I construct the core portfolio, it is primarily going to be India-driven themes. So whether it's domestic consumption or infrastructure, within IT, it now gets a little selective about those companies that have made adequate headway in penetrating the Indian and other Asian markets. So there are a couple of names which were ahead of the curve in moving away dependence from the Western markets and they are now actually pretty entrenched in Asia, Africa, and even in India. So those are the IT plays for me, not the plain vanilla ones that are just typical Europe and America dependent.
Okay, so the domestic theme overrides pretty much the larger call here. Mohit, stay on with me. I'm just watching D Street in conversation with Mohit Mirchandani, Head of Equity at Taurus Mutual Fund. Mohit, you were talking about how you're looking at domestic IT plays as well, and the overriding theme seems to be one with domestic focus. If you have to widen that to the gamut of your entire portfolio and various other sectors, construct your portfolio for us.
As in terms of allocation to different sectors?
Absolutely. In terms of your favorite themes or favorite stories that you would endorse.
Yeah, okay. I could surely talk about that. There are a few themes that we are putting together. We're actively scouting for ideas in these spaces. One is the availability of gas, which I think is a huge story for India. We're finding a lot of it everywhere. That's going to get a lot of help from a push from the government side as well, because it's going to decrease our deficit, and so that situation improves. So I suspect that's a big theme to play. The second theme is consumption, without a doubt, and this entire, the Aam Aadmi kind of theme. You have 1 billion people who are going to, 700 million of those are rural areas or tier 2 city onwards. There's going to be an upgrade in lifestyle across the board. It's not just those 700 million that will upgrade, everyone is going to upgrade. So the rural person will aspire to own a motorcycle or to brush with toothpaste. A motorcycle owner will aspire to own a car. And I think as we go through our Indian industrial revolution, as I call it, similar to what the US went through post-World War II, I suspect we're going to see an increase in penetration of auto ownership, of home ownership, of financial products. So this is all what I classify as domestic consumption, domestic theme, which goes beyond just regular FMCG pharma. It goes across the entire upgrade cycle, if I can call it.
That's interesting.
And the third is infrastructure for India.
Okay, the valuation paradigm so moves on in that sense. Mohit, sorry to interrupt. You were talking about infrastructure, but there have been some concerns in key earnings like BHEL, L&T. The concern is that the visibility is not adequate, and everyone's waiting for government projects to come on track. Traction in the second half, back-ended growth of order book as well. Are you of the opinion that things will be able to match up, because expectations in that sector are the highest we've seen?
No, actually, I'm not so optimistic on the execution front, just because I'm only basing it on what I've seen in the past. At the ground level, we have a lot of policy announcements, but what translates into execution at the ground level is, I don't know, 5, 10, 15% of that. That's a subjective guess. And what translates into earnings for the companies is actual execution, not grand announcements. So as we go out looking for stocks in the infrastructure space, we're only looking for those companies that have adequate visibility for at least a couple of years. So even if on the execution front there's a delay of 6 months and 1 year, we're okay. These boys are covered for a couple of years in terms of business at least. And I also suspect the infrastructure space will not get the fancy evaluations that they've had in the past. So now their valuations and stock prices will track absolute earnings as they come along.
All right, that's interesting analysis there, Mohit Mirchandani. Pleasure speaking with you. Thanks very much indeed for joining me and sharing some of those insights into how you read the story. So a couple of stories that Mohit was pointing out. One, the availability of gas theme. Second, the consumption theme, but more as it pertains to the upgrade cycle across various sectors. And he was also making the point that the range would be 3,700 to about 4,700 for the Nifty. But let's move. Thanks for watching. It's over from me to Bharat Iyer on Profit at 5, who's got the latest headlines with him. Bharat, what do you have?